Welcome to Make Your Money Matter. I'm your host, Brad Barrett. I'm also a managing director and partner here at One Capital Management. And today on the show, I want to talk about value investing. Look, it is not a boring investing strategy, and we're here to actually debunk that. I know for those of you out there thinking that you're looking for growth only, understand this, that value means more than just dividend paying, okay? It's truly finding value. And here at One Capital Management, we tend to believe that we're value seekers. So I want to go into that today. But before we get started, make sure to smash that subscribe button, hit the notification bell so you don't miss a single episode. All right, let's get into it. When we talk about value investing, the first question is, what is value investing? Okay, to be clear, it does not mean you're buying a stock or an investment that has zero growth. It just means that growth isn't the main appeal. I want to say that again. It doesn't mean that you're buying a stock that has zero growth. It just means that it's not the first and only thing. Instead, when you're value investing, you're investing in a company that's likely to be underpriced and overlooked when compared to its flashier rivals. And I want to give you some things of what to look for and how to find the best value when it comes to your investments. And today I'm going to give you three. The first one I'm going to go and bring up here is the debt to asset ratio. So value investing prioritizes companies that have modest debts, and these debts that are backed by much more than just substantial assets. So not only does a low debt load going to provide stability, it also tends to prove management is responsible and has some restraint. Now, generally, a debt to asset ratio of 1 or less is very attractive. If not the most attractive thing, is that it means those debts are being covered and paid for. Item number 2 that I want to go through when it comes to value investing is the price to earnings ratio. Sometimes we hear this as the PE ratio. Look, bigger companies out there obviously have what? They have bigger profits. So it helps to normalize what we call the raw data or the raw numbers by breaking down those profits into earnings per share, otherwise known as EPS, and then comparing them against the company's current stock price. What this does is it allows for, we'll call it apples to apples comparisons between the stocks. Now, right now, currently, the broader price to earnings multiple of the PE ratio on the S&P 500 is right around the low 20s. So there's some industry groups that have averages moderately higher or lower than that. It's subjective, but it gives you some relevance here to a time where we are here in 2023. And the third one I want to bring up when it comes to value hunting or value seeking around value investments is the dividends, specifically dividend yields. The dividends, as we know them, are regular profit sharing payments to shareholders. That's like their basic definition. I'm going to talk about this in an upcoming episode as well. Now, a company's dividend yield takes the total payments you get over the year or the 12 months and presents that dollar figure as a percentage of your initial buy-in. Now, as you can imagine, getting a piece of your investment back regularly is a very attractive proposition to many investors. Now, there are obviously many other financial metrics out there going to, for the matter, I think, to value investors. But these three, I think, are a good start. These three, as it relates to dividend yield, price to earnings ratio, and debt to asset ratio, are things to look for. And there's been a host of big name value investors out there on Wall Street. I mean, the most notable one is Warren Buffett and Berkshire Hathaway. And obviously, the economist, the father of economics, we know him as Benjamin Graham. This works, okay? Going to, again, these are all, again, widely known and considered great value seekers and investors. So I just want to talk today on our show around value investing versus growth investing. And I think what I've noticed in the industry is that there's been this connotation with value investing like it's some boring old fuddy-duddy area of investing. And the reality is seeking value in anything in life matters. And when it comes to value investing, there's some ratios and some things that matter that I wanted to bring up to you. And again, it's not that you're buying something that has zero growth. Growth is just not the only thing. Again, you want to consider their debt load, their price of earnings multiple, their dividends, and so on. So all these factors I brought up have a lot to do with how you would look at value investing and ultimately how you want value investing to be in your portfolio and ultimately in your overall retirement plan. Hey, I hope you enjoyed that today. If you did, make sure to subscribe to the channel. And until next time, always remember to make your money matter.